said that they were going to do away with the program, that means that all of those short positions would have had to be closed, aka all of those buy orders would have had to come into the market. Welcome back, YouTube. So if you've been following my videos or any of the news that's been happening recently, you'll know that crypto.com has pretty much delisted a lot of the meme tokens when it comes down to their rewards program. And I was really trying to figure out why would they do something like this, because over the last 48 hours, 72 hours, we've seen a tremendous amount of volume in the meme tokens, even despite that Bitcoin and Ethereum had not rallied like that. And we were still seeing green days and green candles and stuff like that on the meme coins specifically. And I couldn't help but think that somehow this was linked. And then I went into the process as far as for comparing the different terminologies that they use, rewards program, yield farming, or staking and stuff like that. They're all relatively the same, which is when they borrow your crypto and then they lend it out to someone else. So basically someone is borrowing crypto that you lent to the exchange that they're lending, that they're borrowing from the exchange. So basically your crypto gets lent an additional time after you give it to the exchange. We know that crypto.com is a huge platform and it's one of the leading platforms overall when it comes down to crypto. And now I believe that they're one of the leading platforms when it comes down to crypto lending and a lot of the short action that we've seen as well. And I'm going to explain this in this video, how this has tremendously helped meme tokens alike and how we can use this as a model to keep going forward with our plan of action. So let's start off with what changed. What changed is we now have lower volume over across the market. And we now have uncertainty in the future of the market. And we also now have people removing their coins from the exchanges and putting them on their own wallet. So basically you have revenue loss from transactional value. You have a dwindling supply, which is access to the overall coin. And then you have uncertainty in the market. This is pretty much a prime opportunity here for a short squeeze if your books are not correct. If you are doing fractional lending, or if you're overextending or lending out everyone's coins and stuff like that, you're putting yourself in a position here because there's going to be a day of atonement if you're not monitoring your books. And overall, that's too much of a headache if you are trying to run a legit company. What we've seen over the past month or over the past couple of years is exchanges typically do not do this. They wait until they get caught, and then they have to do things like dramatically, like turn off withdrawals or stop or make the buy button disappear, or just really types of like sketchy things that really just tarnish the reputation of the company. But I believe crypto.com was taking a proactive stance and saying that, okay, well, these meme tokens right now, they're too risky for us to have on the platform. Why is that? That's because if you compare meme tokens to something like a Bitcoin or Ethereum, you're going to look at the average duration of a hold or the turnover rate. The turnover rate is much higher on something like a Dogecoin or Shiba Inu, and the amount that they're purchasing is also going to be a lot lower than something like a Bitcoin or Ethereum, the average purchase price. And then you have to take into account to what degree are these assets shorted. These meme tokens are almost always the more aggressively shorted crypto tokens. So this is going to put an opportunity here to say that the majority of the people or the big money is actually short on these coins, and we're having very low transactional value right now, and we don't have the coins. This is all downward pressure here on the exchange to make sure that they're probably making very little to no money, and they're going to be forced to be in a situation that they're really going to have to lend these coins out dramatically in order to make a profit on them. And to my guess, the crypto.com did not want to go down that road. So what does this mean for crypto, and why did we see that run up? Where if you total what happened when we had those big green days, you'll see that Dogecoin did in about 24 hours about $1.1 billion in volume. Shiba Inu did around $700 million in value. So we're looking at just between those two, like you can call them up the top two, meme tokens, but just between those two coins, they did $1.8 billion in 24 hours. And I was thinking to myself, this is very interesting. And the market was literally just a red day, but these coins were literally just taking off. And I was like, what is this? But then I remembered, if these two are linked and they're getting rid of the short position, which is basically what they've done. They said they're no longer going to allow the reward program, which means that they're no longer going to use it to pretty much lend out, that would mean that the majority, if not all of those positions would have to be closed out. How do you close out a short position? You have to buy the asset. When you open a short position, pretty much it creates an automatic sell order. So it creates that downward pressure on there. You're a buyer at some point. A short is a guaranteed buyer at some point. So if they said that they were going to do away with the program, that means that all of those short positions would have had to be closed, aka all of those buy orders would have had to come into the market to close out these positions. And I believe this is exactly what happened. That's why we got that big run up. And that's why if we take a look here at the charts for Doge and Shiba and stuff like that, you'll see a very strict correlation that when we had those big run ups, shorts were literally running out of the market. The shorts were going through the floor. And I believe that is the short positions that crypto.com had lent out, and they were closing those positions because they no longer want to offer them. This would also explain why we had the dip down and we had that sell off, because if you're a shorter in the market and you have to close your position, you're going to dump the coin, the stock anyway. So it's not something that you want to hold, but you just simply had to buy it to close the position. So you're still going to sell it, but you just kind of had to buy back in. So that you're going to get the rise, and then you're going to see like a slight sell-off again. But now what you've done is you've intrigued people's interest as far as for the coin. So you're going to have a spike in retail investment. And the biggest benefit that you're going to have is you're going to have a really large platform that's technically no longer offering shorts in this position here. So now you're going to have the meme tokens that were heavily shorted. You have the potential for them to rise to a higher level, or basically closer to their truer value, compared to when they had all of that short pressure piled onto them from being lent out via this exchange. This is a huge step forward for crypto alike, not just the meme tokens, but overall. And this really shows you the power that shorts have, because when I wrote those articles on Reddit and Twitter and stuff like that, a lot of people were questioning, okay, what's the effect of shorts and stuff like that? How big of a deal is it? And shorts, a sell order on an asset is literally a synthetic order to pretty much push the price down. And if you come in with a lot of money, you can hijack the price of the coin, you can double down, triple down on shorts, and really just take control of the price action, send it to hell if you want to. There's a lot of things that you can do with shorts. And I think this is a really good example to use going forward, and to also demonstrate the power that you have in influencing these exchanges when you start removing dramatic amounts of coins as well. Because I do believe that played a part in this. These exchanges are watching what's going on, and the ones that want to do the right things, they're going to have these conversations with their risk management team, and they're not going to put themselves in this situation to damage the reputation of the company or potentially get squeezed and it costs them an absolute fortune. So typically you'll see them be proactive versus reactive. We've seen a lot of reactive brokerages across the board here, but I do believe we just witnessed the first proactive solution. And I just want to take a look here at the chart so you guys can see what I'm talking about. You'll see here, this is pretty much the 3 consecutive days where we had shorts pretty much just literally just running out of the coin since we've had that big run up. And this happened simultaneously with the run up, and even afterwards, we've had another 2 days of shorts leaving the coin. And if you come over here and you look at something like a Shiba, you will see, I'm going to confirm with Shiba, that the exact same thing happened. You'll see that we had a big drop off in shorts. And what does that mean? That means when you have less selling pressure on the coin. So what does that mean? That means that these coins are free to rally because of the buy orders that are coming in, and they're going to move more fluid according to the new buy orders that come in. This is why I believe we saw those huge spikes, because of the crypto.com was getting ready to announce that they're no longer include these coins in their program. So keep that in mind going forward. I believe this is a really big deal for crypto alike. I think this is a huge win, a historic win, really. And I think that this should be used as a model going forward as far as for the power of the people. And I think that we should continue moving our coins off of exchanges. And if you're looking for a cold wallet, I have a link to Ledger in my description section so that you can order directly from the company. You don't have to worry about getting scammed and stuff like that. I hope this video finds you well. I appreciate all of you. Like the video if you found any value. Subscribe to the channel for more. I'll talk to you next time.